Just a quick background, OmniPay was established as a non-bank financial institution in 2009, and we obtained our e-money license in 2012. We're proudly built and owned in the Philippines. Today, we have offices in Jakarta, Kuala Lumpur, Singapore, and Vancouver. We're somewhat different from the other players in the industry in that we operate purely on a business-to-business model. Today, we're members of JCB, UnionPay, Discover, Diners, BankNet, and Eurogiro. We are issuers of physical and virtual cards, and we also do acquiring, both with POS terminals and also virtually through e-commerce channels. Our technology is built and developed in the Philippines. As Richard mentioned earlier, our mother company of OmniPay is Bastion Payment Systems. It is the outsourced service provider for all the technology of OmniPay, built from the ground up. So that includes the physical data centers, the core engine, the application layer, including a card management system, payment gateway, remittance platform, and all the reporting that comes with it. We also, as Richard mentioned, own a joint venture with a contract to deliver the new real-time gross settlement system, also known as PhilPass Plus, to the Central Bank of the Philippines middle of this year, likely in the July timeframe. This is the foundational payment system for the entire country. OmniPay's primary lines of businesses, as Richard mentioned, is issuing prepaid payment cards, but we also do e-commerce acquiring for larger complex merchants such as airlines, including Philippine Airlines, Cathay Pacific, Korean Airlines, and the like. We also have an agent network, both domestic and international, mainly to support the remittances from our overseas Filipino workers. From a FinTech perspective, I guess we were FinTech before that was even coined as a term in terms of the jargon. But most of the FinTechs we evaluated in the early days were mostly tech and very little fin. I guess part of the challenge is that although payments is global, the nature of payments is still inherently local. We see a lot of regional differences in how people pay, and certainly the regulators, including the central banks of the various countries, impose different regulations for different activities across different geographies. That said, change is accelerating. Credit cards took 28 years to reach 50 million users. YouTube took 10 months. Pokemon Go took 19 days. So not only is change constant, it is getting faster and faster. So some of my thoughts, I guess, regarding the trends of FinTech. We see the rise of domestic payment systems. These will take away market share from the international card networks. Locally in the Philippines, we see InstaPay and PesoNet. These two systems have played a key role in helping a lot of our population cope with the lockdown effect in terms of being able to provide interbank fund transfer services, either in real time like InstaPay or in batch like in PesoNet. Moreover, we have PHQR now live for peer-to-peer transfers, with the peer-to-merchant or person-to-merchant being launched later this year. Another trend we see in terms of the domestic payment systems is the move to link regionally. You see the Asia Payment Network as a consortium of domestic ATM networks. BankNet is currently the Philippine representative. But we also see plans for interoperability of QR codes, even as we only begin to launch our own. There is the Bharat QR from India, there is QRIS from Indonesia, SGQR in Singapore. Sooner or later, these QR codes will also become interoperable and increase the velocity of change. Some of the interesting signals for the future that we're monitoring closely. One is the diminishing fee-based income opportunities for fintechs. So we see the central bank has changed the ATM charging model. We see the move, I guess, towards no fee or low fee at the point of sale, whether through QR or point of sale machines with the payment cards. This is still something of discussion with the industry and the central bank, but we do expect at lower levels in terms of micropayments, it will be free. So it will be somewhere between the 400 peso to 1,000 peso range. Transactions under that size will become free moving forward, probably later this year. The other trend that we see are monitoring closely is the move from offshoring versus migration. So obviously this will have material impact on the Philippines with the remittance flows. This is a big societal trend, I guess, that was accelerated by the pandemic as well. There's also regulatory push towards open banking. So we already see this in some countries, but in the Philippines, our expectation is that we will see the central bank push for it before the year is out. There's also the growing interest in terms of these issuance of digital fiat currency that are known as central bank digital currencies, or CBDCs. Probably one of the world leaders for this right now is China, but certainly countries like Canada, Singapore are taking keen interest and looking to launch something interoperable already. The Philippines is also taking a close look from the BSP's perspective. So this is again something that we're watching very closely in terms of the technology that will be impacting our industry. Another exciting one, actually, very exciting one, that I think will fundamentally upend and transform our industry is quantum computing. Most of our existing payment infrastructure is based on encryption that's developed on classical computers. Now, how that classical computer encryption will hold up against quantum computing remains to be seen. But my expectation is we will have to almost reinvent the wheel in terms of moving forward from classical computing into quantum computing as that becomes more mature in the next few years. So I guess the takeaway that I want to leave the audience is that the pandemic accelerated adoption of digital payments. The BSP is pushing very, very hard at this, and they're actually targeting 50% retail payments being digital by 2023. They're so serious that the central bank actually created a new sector specifically to drive digital adoption. It's called the Payments and Currency Management sector. And we are expecting a new deputy governor to be appointed sometime this month, actually, to head up this new sector. That's how serious the BSP is looking at this, and that's how hard they will be pushing. But at the end of the day, for my peers in the industry in FinTech and the ones that are maybe looking to get into it, my advice would be to clearly define your value proposition. At the end of the day, it has to make payments or finance faster, cheaper, safer, or more convenient. If you can't answer any one of those questions positively, then I think you have to re-examine the business model and the technology. Thank you, Richard, for having me.